Welcome to Signal Stock. Today we're breaking down 7 stocks, and the biggest lesson of the week is that the crowd got it exactly backwards. This was the week the market flipped. For months, money poured into anything touching AI chips, and software companies were left for dead. This week that reversed hard. Money rushed out of chips and into beating down software. But here's the twist we'll build to. The software stocks everyone bought are bouncing inside downtrends, while the one chip stock everyone dumped is the only real buy on our board. But first, we have to talk about our own scorecard, because last week was the hardest this channel has had, and we found exactly what went wrong. Let's be straight. Of our 5 forecasts last week, only 1 landed inside its range. The other 4 broke out completely. And when we went back to find out why, the answer was uncomfortable but simple. Our volatility estimates were running about 40% too low. Here's the fix, and it's already in force. Every target and every stop this week is built on live volatility data pulled straight from the daily chart, no more estimates. Start with the spark. Microsoft reported earnings, its cloud business crossed a milestone no company had ever hit, and the stock added the largest single-day value gain in the history of the US market. That one result re-rated every software company that had been punished all year. One honest footnote, though, about a third of the earnings beat came from a one-time investment gain, not the core business. Strong quarter, just not quite as clean as the headline. Our take on Microsoft. Hold, and this is discipline, not doubt. The chart is stretched to nearly 3.5 times its normal range above trend, and momentum is overbought. This is the best business on the board, but you don't chase a stock that's already run this far. It becomes a buy on a pullback to support, not up here. Now the ripple. Once Microsoft lit the fuse, money flooded into the software names beating down hardest: Oracle, Salesforce, ServiceNow and Adobe. All up around 10 to 11% in a week. But here's the catch. Not one of them jumped on its own news, this was pure rotation. And every single one is still trading below its long-term trend line. That makes each of these a bounce inside a downtrend, not a proven turnaround. So all 4 are a hold. The one to watch is Adobe. It's the cheapest of the group and the only one whose weekly trend has actually turned up. If it can close a week back above its long-term trend line, that flips it to a buy. Until then, a one-day rotation is not an entry, and if the chip trade recovers, this can snap back just as fast as it came. So if everyone was selling chips, here's where it gets interesting. KLA, a semiconductor leader, fell more than 14% this week. And that drop is the best setup on our entire board. Here's why the crowd has it backwards. This isn't a stock breaking down, it's a market leader pulling back. Its long-term trend line is still rising, the price is still above it, and by every strength measure we track, this is the strongest name on the board. It beat earnings and raised its guidance. A leader falling back to rising support is one of the highest quality setups there is. So KLA is our one buy this week, but a disciplined one. We're not buying blindly into the fall. The trigger is a reclaim of the short-term average, held for 3 days. If that fires, we're buyers, with a clear stop just below. And here's our line in the sand, on camera. If this stock closes a week below its long-term trend line, the setup is dead and we're out. That's the level that decides it. Our last stock stands apart from all of this. NRG Energy fell 12% to a new low for the year, and if that sounds familiar, it should. Just 2 weeks ago this same stock jumped almost 11%. It's now round-tripped the entire move. We'll be honest here too. Last week we flagged a warning on this stock's momentum, that was right. But we also had a longer-term buy on it, and that call is now underwater. We're not going to pretend otherwise. Our take. Hold across every horizon. A stock breaking to new lows right before earnings, with analysts cutting their numbers, is not a place to add. Its earnings report in a few days is the fork in the road. A strong result reopens the story, a weak one puts the whole thesis in question. So here's the board. One Microsoft earnings report rotated the whole market out of chips and into software. But the software rally is mostly a trap, bounces inside downtrends, while the chip stock everyone sold, KLA, is the one clean buy, on a disciplined trigger. New breakdown every Friday. See you next week. We're diving into the market's downturn, focusing on strategic buys during the crash rather than the rally. This week's movers include MSFT, Now, ORCL, CRM, ADBE, and CLAC, with CLAC being the standout buy despite its drop. Our forecast accuracy remains strong, with 37 out of 39 predictions confirmed. The focus is on adjusting strategies based on actual market behavior, with a particular emphasis on the ATR underestimation and its implications. Microsoft's stock shows a significant gain, driven by strong earnings and Azure's performance. The stock is currently a hold, with potential for further growth as Azure continues to expand its market share. Oracle, Salesforce, ServiceNow, and Adobe are all recommended holds, as they remain below their 30-week moving averages. Each company shows potential for recovery, but caution is advised. CLAC's stock has dropped, but it's identified as a buy due to its potential for recovery. The focus is on strategic buying during pullbacks, with a detailed analysis of its current position and future prospects. NRG Energy shows a decline, with a focus on strategic holds and potential future growth. The analysis highlights the importance of understanding market shifts and adjusting strategies accordingly. This week's recap highlights CLAC as the standout buy, with strategic holds for other stocks. The focus is on understanding market dynamics and making informed decisions for the upcoming week.